Let's bring in Bloomberg's equities reporter, Stephanie Hughes. She joins us now to talk some more about first, Goeasy. Stephanie, double take for viewers, seeing how much it dropped today. Walk us through what hit it.
Yeah, no kidding, Marella. Yeah, it's probably not surprising to anybody who's been watching the TSX pretty closely today that I might pick Goeasy to highlight, just given that eye-watering 60% decline at its lowest point. You showed the chart earlier, and it was just a sheer drop. Now, to put that move into perspective, that was enough to bring the stock price to its lowest level in about 6 years, and it was the biggest intraday decline since 1993. I wasn't even alive at that time, so that's how far back it's gone. So that's because the subprime lender based in Mississauga, Ontario, said it expects to write off an additional $233 million in consumer loans, interest, and fees, mostly coming from its auto and power sports equipment lending business. So the company said it expects its net charge-off rate, or the amount of money that it just doesn't expect to collect on at any given time, to be just below 13% for last year and to reach the mid-teens in 2026. That's up from a range that they had before of 7.75 to 9.75. So this really reflects a lot more pressure on consumer loans, consumers just having trouble paying back on what they borrowed, especially in the auto space. And so they end up defaulting on these loans, and the company is the one that takes the hit for it, Marella.
Okay, some of us were born in that time, but we won't get into it. Part of the problem for this company is auto loans, I understand. Can you explain?
Absolutely, yeah. So it's part of the wacky world of auto lending these days. So the losses came from LendCare's merchant network, a segment that specializes in auto and recreational vehicle loans, recreational vehicles being your ATVs, your snowmobiles, Sea-Doos, what have you. So there were weaker than expected recoveries on past due accounts. So the company had to write down on loans that it was obviously hoping to collect money on. So this is part of this has been a part of an industry-wide issue where repossession firms have just been at full capacity, and that really slows down the how quickly a lender can actually recover some collateral like a vehicle. So that when borrowers obviously miss too many payments, so that it means that the company doesn't really get the full collateral back. They don't get the money back, and I think it also shows something about the state of the auto lending industry that the repossession firms are just way too busy right now. So Goeasy is obviously hoping to turn things around, saying that it is pursuing a multi-stage business recovery strategy that includes cutting back on auto loans from LendCare and slashing $30 million in annual costs. Management will also correct an earlier financial reporting tactic process with LendCare to address some of the incorrect reporting on some of its customer payments, which they realized, or they thought they realized the payment. It didn't end up coming through before it came through, and then it didn't end up coming through. So ended up being a bit misreported. So this is all this news is working in tandem to give Goeasy its worst day since the early 90s, but the company has a plan to kind of turn that around, and they'll share more details about that when they report their fourth quarter results coming in on March 25th. So we'll have to see what comes up next, Marella.
All right, we will wait for that. Bloomberg Stephanie Hughes, thank you for the update.